Welcome back to the original channel of the FOMC Fed meeting. I'm Tom Crown, and today Chairman Powell will be joining us live at 2:30 p.m. East. We're live early for the spice. We're going to be going over what this means, what the Fed is, important data that we've gotten since the last meeting, what the likely outcome of this meeting is, and so much more. We're going to be looking at some charts, but today is a day we like to kind of spice up what is traditionally a very boring event. If monetary fiscal policy gets your gears going, well, you're in the right place anyway. If you could, smash the likes and subscribes. We just hit 100K on YouTube, and I could not be any more proud, any more grateful, any more humbled than you guys have made me. Thank you so much, guys. Thank you. The intro, yes. This is the home, the original. We've been doing this for years before it was cool. Everyone else caught on, but we're happy to share the holiday. I know you have a choice in watching, and I'm glad you've chosen the Tom Crown channel. In front of us, let's look here quick. In front of us is the Fed rate, effective Fed rate, which really is just the Fed rate. Over the course of the last many decades, let's see notable parts of this chart really quick. 2016, we saw interest rates reach roughly where they are today. A little foreshadowing here. At about 5.26%, it's at 5.33 right now, so the exact same thing. That was into the 2008 financial crisis when the Fed rolled back interest rates to effectively zero. Come on, phone. Into 2019. We saw those rates return to about half their previous level. And of course, during the 2020 market crash, we saw those rates drop to zero. Since then, starting early 2022, we've covered this every step of the way. These interest rates have climbed back up at a pace really unseen in the history of interest rate hikes. And that brings us to today, sitting at 5.33%. If you kind of eye this chart, you'll notice 5.3. That's roughly about the average where these rates sit. Back in the 80s, these rates reached as high as 20%, and since then really just trended down. But about 5.3 in that range of the average over the last many decades. There is definitely some potential issues, risks to banks, like we saw in 2008, with these rates being so high so quickly. But we'll get more into this as we go on. Over the last few months, markets have been very spicy. We've seen all-time highs in S&P 500, NASDAQ, Bitcoin, gold. You name it, it's basically been at an all-time high. The only thing more volatile than markets over this year has been what participants think is going to happen in this year at these meetings. Earlier in the year, the market was looking for 5 interest rate cuts in 2024. That seems kind of out of grasp now. Participants looking maybe for 3 into 2024, and lots of speculation, I believe it was in January, was looking for an interest rate cut this month. I'm going to tell you guys, I tweeted about this a while ago, twitter.com/TomCrownCrypto. Not going to happen. Looking at the CME's Fed Rate Watch tool, virtually a 100% chance by CME that we're not getting any interest rate cut or increase today. I'll put a little hot take out there. I think it's more likely that we would get an interest rate increase than decrease at this meeting. I expect the tone to be hawkish. And Chairman Powell, I expect him to not have the data. Drink every time he says data. Gina, I expect to ask a question. These are all predictions. Gina, chug every time you see Gina. Gina will look beautiful. She won't notice us this time, but she will soon. A few more predictions coming up. A few more. Pretty much everything in agreement. Looking at investing.com, 100% probability of no interest rate increase today. 100% aren't real. It's just showing the confidence. The curveball here is if we do get a cut or a hike, that's really going to be outside the scope of what is expected. I think they're really unlikely, but that would be the mix-up that potentially could cause some kind of greater volatility event in markets. Let me see. I got a few more things. Got a few more. We've had a lot of anticipation surrounding this event, and especially for March, as I've just outlined. This has led to cautious trading, at least in my opinion, in crypto. We have seen some interesting stuff over the last week. And I think that investors are bracing for short-term volatility and subdued trading conditions leading up to the next event, whatever that is. Unlikely going to be today, but you never know. We could have protesters come out of nowhere. Jerome Powell could say the F word. People could be gluing themselves to artwork. You never know with these things. They've really become, what's the word? Pageantry? What's the word for that? You know what I mean. A lot of pageantry, a lot of drama. Despite this cautious approach, I think that optimism is still prevailing regarding the long-term outlook of both crypto, stocks, and other markets. Crypto does have the factor of the Bitcoin halving coming up in April 20th, 420. It has to happen that day. It is a prophecy. If it happens any other day, I quit. I think that the Bitcoin ETFs continue to fuel some of this bullish sentiment in the market, though we will take a look at those in just a minute. We have seen some of our first outflows. They aren't the end of the world, but we have talked about what happens when we start seeing outflows. We'll get into that again. Basically, the market is awaiting this crucial speech by Chairman Powell. Can I get a Chairman Powell in chat? A little Chairman Powell. A Chairman Powell. A little Chairman Powell in chat. Type it. If you have the emojis, use the emojis. They're awaiting this crucial moment today. I know we are. We got hundreds watching. Let's go, fam. Make sure to hit those likes and subscribes. Keep the hype going. Really, I think the takeaway is investors are optimistic right now. Yeah, that's the best takeaway. Let's look at the ETF inflows and outflows and total net flows on the day. 2 days in a row, I believe we've seen ETF outflows for net. This is not the end of the world. This is expected at some point. In fact, it wasn't the first time. We've seen 1, 2, 3, 4, 5, 6, 7 days of outflows. And back in January, we saw 4 days in a row of outflows. Right now, we're on 2. Yes, these are bigger, the biggest one. But if you look at them, maybe 300 or maybe 3,000. What is it? 3,000 out yesterday. We have had over 12,000 inflows. You know, use your judgment. Use your judgment here. This is not the end of the world, but we have talked about this and we've said as long as these total flows are positive, as long as ETFs are consuming, buying, holding, grabbing, whatever you want to call it, more Bitcoin than we are seeing leave, say GBTC, that is a net positive on price indirectly, not directly. So we are still doing fine, but we said that this would be the first sign. The first sign we would look for, one of them, is for these ETF outflows to continue to stay red. So what this means to me is keep that cautious approach. Bull runs are very hard trading. You don't need to trade. The gains are there. Really, if you focus on protecting your capital, protecting your gains, you're going to do really well. Over trading will get you. But this is the first sign, so we're going to take that. We're going to put that in our pocket. We're going to remember it. And when we look at the chart, we might not even need the flows to really grasp that. Let's move over to a little piece of news here that wasn't related, and I guess I wasn't even going to talk about, but I did want to point out, just because you guys know I care about your safety, I care about this community. Trezor, their Twitter account, you have to be very careful with this. Trezor's Twitter account was hacked. Trezor, the hardware, not hacked. Just like Ledger had a lot of these hack things. In fact, it's hard to even comment about Ledger on the internet anymore because you instantly get replies of, oh, it's hacked. Hardware is not hacked, just like Trezor. Trezor, hardware not hacked. They had some kind of vulnerability on Twitter or something, and they posted the typical scam drainer wallet thing. Friendly reminder, no matter who posts these on any platform, anything that resembles this, do not connect your wallets, and if you can't stop yourself, at least make a brand new fresh wallet, fresh key with nothing in it, and then connect that. Like, minimum, guys, please. It kills me when I see this community lose money to this kind of BS. Like, it hurts my soul. I don't want to see it happen. Let's not let it happen, okay? There it is. Don't do it. No, bad. Slap yourself in the hand, bad. All right. Bad. I had a few notes from some talented analysts as well. Some analysis basically just leading up to the FOMC that I think I will share some with you here. Before I jump into that, which will be in just a minute, we do have our typical FOMC chart up For those of you new here, that is Bitcoin on the top, dollar in the middle, and S&P 500 at the bottom. Sometimes we change it out for gold, etc. We might even throw in gold here if we're feeling spicy really quick. And what we do here is we listen to these speeches together because it's more fun. We try to have a good time with it, but we also watch the market and we gauge the market's reaction to each specific thing that is said or events that happened during today. So what we have here, for those just tuning in, it is 1:30. We have exactly 32 minutes until the interest rate decision will be published live. Why it's published live to, I don't know, like news outlets and not just on their site, I don't know. Seems a little shady. But at 2 p.m., news outlets and journalists, I guess, will receive that interest rate decision, and we all band together our power and we do a group Googling and we try to find what the interest rate decision is as soon as possible. We'll get into that then. We'll jump into that in a little bit. Let me go to these notes. The notes. Here we are. Okay, so these are a lot of kind of greater market notes, but I'm going to do these and then we're going to jump into Bitcoin. They'll give us just enough time to get ready for that decision. Let me see something real quick, guys. We got a bunch of viewers. We got like 1,000 viewers. Heck yeah. Let's get that to 2,000. Let's get it to over 9,000. Just keep hitting the likes, shares, subscribes. That'll help it out. All right. Yesterday, we saw a dip in the equities markets like the S&P 500. On the weekly chart, it's hard to even see here, but key takeaway for me, going off notes already. That did not last long. Weekly, in front of us, we did see a sell-off yesterday, but the S&P 500 remains strong at its yearly and all-time high, just under 5,200. Despite that sell-off, right back to where it was, right before the FOMC meeting. If we go down to the day, we're going to get a better picture of this. I guess it was 2 days ago. Oh, man, whatever. Friday, Monday, over the weekend. Little sell-off, but really holding strong, and I'm seeing the S&P 500 retest this newly created all-time high resistance. Lows are coming up. This is looking pretty good. In the pre-market report, and it's been continually mentioned by other commentaries, traders remain incredibly short on volatility in the greater markets. Not really a surprise when you look at the S&P 500. Not a ton of volatility here. Really clearly defined, perhaps ascending parallel channel. Not a lot of volatility to be seen, and that will be reflected here in the next point. As such, we have seen the VIX move down, the volatility index, down very low. Here's a multiple year chart of the VIX. You can see this spiking during the 2008 financial crisis, during 2020. If you remember to the beginning of this episode just a little bit ago, I think I might have closed it, so I can't pull it back up. Those were the big moves on the federal interest rates, effective federal interest rate during those two times. And not coincidentally, that is when we saw the largest spikes in volatility. We are now down here, kind of in the dirty, in the muck of volatility, really reaching historical lows of volatility. Something to note, typically we do see this happen on the VIX before a large move or very volatile move happens. Can we say that that means that's coming soon? Not really, but again, something to keep an eye on and something to use as confluence with the rest of all the other stuff we're looking at today. This is fueling market makers to add liquidity, which has led to an intraday recovery. It's about the S&P 500. Intraday recovery as it sold off back up to the highs as liquidity was added. Today we have the FOMC, which is obviously going to be the key focus. And today we will have the updated dot plot. You guys know I'm very, very stoked about this dot plot. It's the most fun thing the Fed has ever done. In the realm of fun things on a 1 to 10, it's like a 1, but for the Fed, a Fed 1 is like a 100 for the Fed. It's very exciting for me. You can make fun of me. There's been low volume in options ahead of this. Typically, guys, I say the same thing every single FOMC. I'm going to say it again. I do not trade these. I do not recommend trading these. We see very extreme volatility during these events. And let me show you kind of what we typically expect. And I'll show it on this one. For Bitcoin during said events. Whatever direction it is trending, the morning of into the interest rate decision, we generally see reverse into Chair Powell himself speaking. And then once he speaks, it really usually just typically returns back to kind of the medium point. So the reason I say I don't trade this and I don't recommend it is you have an extremely high chance on leverage to get liquidated or stopped out. You typically see a swing high and a swing low, regardless of which one comes first. And really that just hunts out leverage positions. I don't trade them. If you have to trade them, I know you guys are degens. It's okay. If you have to, might as well sign up using a link in the video description below with one of our partners, and at least you'll get VIP access in our Discord for free. Can't beat that. For free. Discord.gg/AtomCrown. You can do it, fam. Do it. All right, let's see. We are turning up into it. Maybe we'll look for this move and reverting back to where it came from. That's typically how it goes. I think I'm almost through this. I think I am. Let me see. January and February CPI coming in ahead of expectations. Shelter and core inflation remaining very sticky, and sticky seems to be the favorite word of the Fed lately. Higher for longer and sticky. I was very hopeful that they would cut interest rates early, but now I'm starting to think we may not get one until the end of the year, which may be a good thing. Typically, if you do remember again that Fed plot, the drops or the reversals of the increase, once we see the Fed increase rates and then start dropping them, typically that's when markets have topped out. So maybe just keep them up here forever. I guess I'll never own a home. I mean, that's fine. I don't need to ever own a home. We can just be homeless, fellow millennials. Let's go. Yeah, tone likely to be hawkish. Traders are not expecting him to be outright hawkish. He is always a double speaker. Probably more neutral. He's going to logically point to the fact that inflation has come down a little bit, but will affirm their intention to continue to bring that inflation down, and that they will monitor the data as it comes. We can all pray that they've found the data today. We've covered these for, I think, almost three and a half, maybe 4. I don't even know, 4 years. And to my knowledge, no one has ever found any data. I don't know where they get the data from. I don't know whose job that is, but they should be fired. Traders are hedging into today's meeting, and the dollar is increasing pre-market. We are now post-pre-market, but the dollar has been on quite a ripper. We were looking for a bounce back to 103.6, but the dollar did not stop pushing higher, retaking 104.27 on the dollar. Going to be a good look, a strong look, but again, FOMC today, depending on what's said, that may be the top for maybe at least like the week or the month on the dollar. Let's look at that weekly. Nice little recovery. Yes, heading back now. I'd say, yeah, 104.26 open weekly. That's actually a closed weekly fair value gap. No, I don't like this now that I look at it more. If the dollar does move to 104.2 and then comes down maybe 102.75 back to 104, that could get ugly. I don't have bullish outlook for the dollar personally, but I know that there are people out there who do. Let me see, is there anything else? JPY, yeah, let's get some currencies quick. This is all related, guys. I know, bear with me. Dollar is ahead of the FOMC decision. USD JPY, which is down here. Dollar versus the Japanese yen. I never know if I should say yen or won. It's yen. Traders moved short on yen and long at USD into the dollar meeting. That is kind of apparent here. The yen looks absolutely terrible on the weekly time frame. We'll just look at this quick because this looks garbage. Remember, the JPY broke its all-time high against Bitcoin before the dollar, and actually before most major other currencies. And I think that's the best sign, the best indicator of Forex currency strength. We have things like the Dixie, which is a basket of goods, but it really at times will only show you how badly other currencies are doing, not how well the dollar is. And that's kind of a unintuitive and not that well-known thing about it. But when we look at currencies against Bitcoin, it has more of a stable anchor point to gauge those strengths. And JPY breaking first and now painting a flat bottom here over the course of over a year. Lower highs, retesting that bottom. This is a very bearish pattern. The JPY may move. Wow, it may move down to 40-year lows. I got to put an alert here. 40-year lows if it breaks 0.0065 against the dollar. That is pretty spicy. Pretty spicy. Let me see where our fib lands us here quick. And then we're going to move on. There it is. 0.0059, 0.0055. Interesting. All right, I'm keeping the eye close on the JPY. GBP, the second, I believe, largest currency. Off of its almost depegging in 22 down to parity, holding strong, painting higher highs and higher lows. It looks like a little bit of a temporary dip. Yep. We have a few day dip here on the GBP. Does look like it's recovered kind of well, but it is still down against the dollar. And as the dollar is rising into the FOMC, that makes sense. We're probably going to see that resolve at the end of the day. All right, I'm bored of currencies. I'm bored of Forex. Let's move on. I'm bored. Too much of the easy general stuff. Too much of it. I'm going to get rid of these lines, but remember them. Remember them. We have seen those hit pretty consistently. Remember, they're just an idea. They are not literal. Let's actually look at the dollar here quick. Interesting that Interesting that gold, despite the dollar showing some strength, managing to hold on to its all-time high. If you remember, earlier this month, gold nearly hit 2,200, making it the highest traded price ever for gold. Not counting inflation. Sorry, Schiff. And it remains up there. To me, that is a sign of potentially the dollar's rally not going to continue, not going to see upside continuation. Gold holding on to this high, to me, it looks like it wants to move higher. Your previous all-time high, we're now seeing, whether it's accumulation or distribution, above that previous high, holding on, not selling off. If you look back to every other time we have watched gold hit an all-time high here on this channel, actually, you know what? Wasn't this one an FOMC? I think last time it hit an all-time high was the FOMC in December. Interesting. Wonder what will happen today. But the point I want to make, every other time gold has hit an all-time high, it has gotten giga smashed, meteor smashed, right back down. Those smashes have become less volatile, less angry, less violent. Seeing those retracements get smaller and smaller, leading up to the current high on gold, in my opinion, holding strong. It's going to be an interesting foreshadowing for other markets here. I'm going to put an alert on gold, but I don't want 4 charts up here. It's too busy. There's too much. Let's get rid of it. Sorry, gold. If you get exciting, we'll look at you. We are now 19 minutes away from the interest rate decision. I think I've gotten through everything I wanted to get through. Nice. Look at me, Mr. 100K. Let's go. All right, I'm going to pull up the chats now. Sorry for ignoring you guys. I wasn't ignoring you. You know my love is always here for you. I am incredibly ADD, and boy, is it difficult. Boy, is it difficult for me to stay on task at times. So I'm pulling up the chats here. Got a bunch of chats up. Maybe I should even pull up the Twitter stream chat. We've never interacted with them. Those Twitter folks. How do you feel about them? Just being weird. All right, give me a second to catch my breath. I'm going to retweet the Twitter stream.
Those Twitter folks.
Let me see if...
How do you feel about them?
Whoa. Sorry about that. How do I even get to the chat for this? Chat. There you go. I got pulled up. I don't know if that works, but we'll see. Here we go. Here we are. Let me do this. What's up, Mr. Steve? My mang. Optical art. In the house. In the hizzy. Who else is here? Are you here today? If you're here today, let me know. I didn't know you were here. You didn't say anything. Steve's in the house. My guy. Let me go to his channel. Let me give him a little shout out. Love Steve. Bringing his community to the Chirpow streams. We love him. Go give him a subscribe. Give him a subscribe. He's a great guy. Let's get him to 100K. Let's do it. He's a great analyst. Of course, his analysis different from mine. We have different outlooks. But what I love about Steve, and honestly what I love about other people's styles of trading, is we might disagree a lot, but when we agree, that's where the value is. When you find the people that you always disagree with, you're both in agreement. You know you got yourself something good. Shout out to Steve, my friend. Shout out. Best TA in town. Thank you, Dan. Thank you, Daniel. My guy, Daniel. I don't know how you do the chats on Twitter. It doesn't really seem to work. I can't pause it, which is annoying as well. I turned down to like no. There we go. Turned down to like no quality. Congratulations on 100K. Thank you, Chris. Appreciate you, my friend. It'll take forever, Optical. Bro, last year in like November, December, I was getting 1,000 subscribers a month. And at that point, 100K was over like a year away. I thought it would happen like next year. Somehow, over the last like 2 months, we have gained a crap ton of subscribers out of nowhere as these markets have heated up. Same thing is going to happen to you, brother. Don't worry. Miracles happen. The channel is pumping. That's right, Joe. That's right. Increase that rate. Increase it. Let me see who's here. We got 2 chats. We got double. Actually, we got like 3, 4 chats. I don't even know how many. I have no idea how many platforms we're streaming on right now. What's up, 420 Bud Monster, Alex V, Chip off the old blockchain, Andy Lee, Chris Carter, Anthony Karen, Daniel Lehman, ODC1, Greg Savchuk, Azzy Wow, Jeremy Hildebrand, Bill Brown, Jay-Z, Blockchain Basement's here. Blockchain Basement. I'll have to shout them out too. But stay here, Blockchain Basement. But I got to get through this or I'll forget. Kirby Crypto, Bloop Scoop. What's up, Baby G? I see you. Mike Bennett, Pink Floaty, Brutal, Roger Keeloon, Cad God 007, Andy Lee. Did you just pop in there? Did I just get you? The Real Pimmer, Zachary, Garland, Brutal. Let me see. Cat Silv. You changed your name, Silv. Welcome back. Cherry City Bulls, Christopher Stars, Corey, Cheap Vlog. What's up, bro? Crypto 420. Actually, let's leave this up for a sec. David Brum. What's up, David Brum? Double D's _ G's, Corey, Deny Doom, Diego, Philomena, Don Manning, Dr. Crypto, Elo Brown, Error Random, For Sure, French Toaster, Flagita Blues, I Need My COD, It's Autopilot, Jack Crypto with the Market Cipher icon. Hell yeah, my friend. Jay Baker, Jeremy Lemaire, Jeffrey Hammond, Joe Potter, Japernicus, Josh Breen, Chris Pax, my guy. Also a YouTube streamer. Check him out. Cryptonautic Angel, my friend. Lars Larson, loading name. Look at how many. This takes forever, man. I love it. I'm loving the love. Keep it up, boys. Lucky Thoughts, Low Mips, Luhan Steenkamp, Luke John, Luna B, Manila, Maddock Coleman, Matt, Matthew Smead, MPAC TV, Mr. Techno Goody Mohammed, Nate Bender, Nefrito 6, One with Nature, our boy Optical Art, Paul Wood, Pest Killers, Philly Skills, Riker's Beard, Randy Greer, Riggy Bobby. That's right, Riggy Bobby. Rolling 69ers, Rushan Mute. Dude, this is wild. This might be the most participants we've ever had. We're almost done, guys. I know it's not what you want. Not why you tuned in. Scotty Swing, Sergio, Shringtech, Simano, Sajor, Smatoshi, Smakamoto, Smacker, Sniffer, Tau, Sin, Sticks, Softshell, The Pickle, my guy. Tillin McPooch. What's up, Tillin? Tom Erengi, Tom Kumagi, Trade Intuition, another streamer. I'm feeling the love. Tree Man, 2 Red Ducks, long time no see, dude. Umar Somro, Vag Poop, Vidias, Venom Hex, Vizo, Wail Hajazi. We are so back. Jacob, yourself, your owner, Monkey. All right, I'd love to get everyone, but holy crap, that was a lot of names. There are more. It's not personal. What's up, Pablo? What's up, my guy? What's I doing? I was looking for Blockchain Basement. There he is. Notice me, senpai. Okay, I will notice you. Let me notice you. Blockchain Basement, some good dudes over there. I like these dudes. If I'm ever in Georgia, I'll be on the show. Give them a subscribble as well. We're spreading the love. We made it to 100,000, and now it's our job to get everyone else to 100,000. Let's go, fam. We have the power. Have the power. Kicking yourself. Kicking it. Chilling. Yes. Good. What's up, Derek? I see you, brother. Jorgen. Novocaine. Yeah, I'll give them a rancheroo. All right. There it is. What's up, Mike? Did you say Reaper shotgun? Wait. Where'd that Reaper shotgun action? I don't know what you're talking about, but it's good. It's good. It's got to be Nick, probably. It's probably Nick. What up? Ready and warm? Well, I don't sit in chairs that aren't heated, all right? So get them ready. Can you imagine if I became like one of those people? I need only green M&Ms. Yeah, right. That'll never happen. That'll never happen. The Fed finally got their shizzle together. And they put their stream up. Wow. That took them a while. Let me grab this up for you. Too many sources. Okay, adding the FOMC stream incoming. Boom. March 20th, 2 p.m. East. Chairman Powell speaks live. He speaks live. And you'll be here. Stay a while and glisten. We'll leave that right here on the small stream, just down behind me. There it is. There you go. There it is. There she blows. They finally got their shit together. I've been waiting all morning for them to put that up. They finally did. Good stuff. We'll do an audio test later. Let's recheck in. Okay, 10 minutes. We're still good. We're vibing. Overwatch. Oh, yeah. Dude, I haven't played Overwatch in forever. I got so sick of it. I played a lot of it. I got sick of it. I've been playing a new crypto game like Hearthstone, actually. Lords of Light. Been dabbling. I've been playing Fortnite. Been playing Helldivers. Good stuff. Show me the data. Chairman Powell. Can I get a Chairman Powell in chat? I know you guys gave me one earlier, but guilty. I didn't see it. Runestone. Nice. All these buttons are wrong. That's okay. What are we looking at? What are we looking at today? We've got Bitcoin, the dollar. We've got some stonks. Here we go. Thank you, Kelly. Thank you, brother. Thank you guys. I owe you guys so much, man. 100,000. I never thought we'd make it. I never thought we'd get this far. We got 10 minutes until the rate is published. So what are we going to do? We got a poll going in the mainstream, 1,300 votes. 73% of us siding with CME, with investing.com, with Tom Crown. The highest probability is no rate change today. 18% looking for a cut. I like that 10% are looking for an interest rate. Dude, it's like a tongue twister. An interest rate increase. I don't know why I like it. I like it. I like it because nobody's talking about it. It would really blindside everybody. If that happened, I think markets would like do wild things. And then eventually they would just chill out again. It wouldn't like destroy, I don't know. It wouldn't destroy anything, but it would certainly be a shakeup. Remember, markets like predictability. They like comfort. They like to know what's happening next. The things they don't like, not knowing what's next and surprises. Kind of like me. I like surprises. I like knowing what's not next. I'm closing the Twitter broadcast because it's not showing me. Look, it's not showing me any chat. It says that there's a lot of viewers, but it's not showing me any chat. See ya. All right. Shit on a brick. What's up? Let's take a peek here. Little BTC analysis. Yes, go. That's what we need. That's what we need. Fresh chart. Our long from last stream got riggedy wrecked. Let's see. Let's show. We don't hide our losses here. Boom, riggedy wrecked. This was on the kind of predication that we were looking for an inverse head and shoulders. This was a good trade even though it lost. The reason it was a good trade is because it had a trade thesis. We were looking for a pattern. We had more than 50% of the pattern, and we identified our stop loss just below what would be the head of this inverse head and shoulders. And we said, okay, if we take a long here, we're going to target our highs, our previous daily highs. But if it trades below the head of the inverse head and shoulder, it's not an inverse head and shoulder. That trade's invalidated. We're out. That's what stop losses are for. Remember, losing trades doesn't necessarily mean you've done something wrong. Winning trades doesn't even mean you've done something right, actually. What it does mean, or what makes them good or bad, is those things. Do you have a plan? Do you have a validation and invalidation? Do you have a take profit? And do you have a stop loss set? That's it. Riggedy wrecked. This is from the 15th of March, I believe. We set this quite a while ago. We've gotten whipped out on these positions. Boom. Like, no other way to do it. There's winning streaks and losing streaks, baby. Whipped out again. I liked this trade very much. Did not play. It was at 63.8, basically targeting the open fair value gap on the day. It looked good for a few hours, but no dice. No dice. Stopped us out. We have seen a little bit of spice here, a little bit of rebound, but at the moment, I don't really see a reason to expect these candles to be different. We need to see today move substantially higher on Bitcoin in order to say, okay, this is not the next likely move. Easy. Easy, easy. Where are we looking for? I could see a wick high potentially in the FOMC, maybe later today, 65,250. This is the previous daily support locally from March 16th and 17th. It was broken through, and you can see here today it has not been back tested as resistance. Ooh, not today. I guess yesterday it did. Ignore the low time frames. Look at the big ones. Hasn't been back tested as resistance today. If we see sellers come in, if price is rejected from 65,250, lower is likely. Is what it is. Is what it is. Should you start freaking out? Probably not. Our wick low from March 5th sits at 59.2 thousand. Trading below there is going to be more uncomfortable. Let's be real. Let's be real. Not as comfortable. If we reject here, 65.2, 59.2 looking very good. That's a 10% move. That's pretty big. This is, to my knowledge, the biggest single day sell-off. 8%. Yep. 6%. 7%. Knew it. This is the, yesterday closed the biggest single day sell-off on Bitcoin in, wow, a while. I don't even know how far back I have to go. The FOMC. I'm one-minded today, boys. It's all right. The ETF sell-off, 7.7% daily candle close. That was on January 12th. Yesterday, March 19th, closed 8.44% or $5,700 down. This is the biggest. Where was the last one, man? Now I'm curious. I think it's actually been a very long time. Does anybody know? Anybody know in the chat? Steve, do you know? I don't want to spend forever doing this. Even August 17th, that was only 7.2%. We are kind of cherry picking because we're looking for a single daily open close. Wow, though. Yeah, you have to go back very far. All right, we've got 4 minutes. Ah, man, I really wanted to find this. I can't find one. Is that the biggest single daily close all year? Even last year, maybe? We could have made some fire clickbait with that. Holy crap. October 22. Yeah. September. There's September 22, 9.9%. August, 10%. I'm sure October's got one too. Actually, October didn't have one. Interesting. That is clickbait worthy in and of itself. Yesterday closed the biggest red candle on Bitcoin. The biggest down candle since 2022. Wild. Doesn't feel that way, does it? Doesn't feel that way. Is what it is. Bollinger Bands for the win. I love Bollinger Bands, Julio. Is the correlation big now with the dollar? I wouldn't say so. I wouldn't say so. No more so than it's been. What I need from you guys, in case you want to show. Sure, Steve. I'm going to pull up Steve's charts here. Steve, you're welcome to comment on them. A little different kind of analyses coming from Steve over here. While you take a peek at these and subscribe to Mr. Optical Art. What I need from you guys, we have less than 3 minutes. Less than 3 minutes. I need you guys. Ooh, I like this one. I like this. A little Bollinger Band bounce. Return to the middle of the band. 674. I like that. I need from you guys. Open up tabs. Open up a search engine tab. Google, Bing, Yahoo, whatever you use. And I want you to start prepping the Googling. We're going to do it together. Prep the Googling. We're all going to sort by published in the last, I don't know, like minute or hour or whatever. We only can use articles that have been published after 2 p.m. East. That's in 2 minutes. What that means is that we cannot use anything that was published right now or is published right now. Let's pull this up. Fed interest rate decision today. So what I'm going to do, I typed this in. Hey, meet Kevin. Meet Kevin has done very well with these, though. I'm not going to lie. He stole our idea. It's okay, Meet Kevin. You're good. But he does a really great job. He does much more in-depth stuff than we do. I'm going to do past hour. And so anything that shows up right now, not usable. Not for the use. Ooh. I see pump ring on Steve's chart here. Pump ring. I'll take that. Can't use anything that's published. See if we can get to these. Let's actually go into here really quick. We're going to watch these candles as they approach. Make their approach. There it is. Bitcoin, dollar, stocks. All right. Get your Googling ready. Your Google's Googled. I want whoever finds it first. Put it in the live chat and name the source. Please don't just say no interest rate hike. If someone says no interest rate hike a quarter second after 2 p.m., don't do that. Someone always does it. That's probably the truth, but just name a source. I know crypto, this site has done a really good job of keeping up in real time. It's cryptocraft.com. Let me pull them up. Yep. This site, Cryptocraft. Shout out to them. They don't pay me, but Cryptocraft does a great job of keeping us up to date. They even have a little countdown timer, so let's see if anybody can beat us in real time. 99%. I mean, it's all but 100, but you never know. You never know. 1 second. Let's get those answers. Pending. I need to refresh. Ooh, dollar taking a dump-a-roon. A big old dump-a-roon on that. Stocks up, Bitcoin lagging, dollar dumping, stocks moving. Let's go, boys. We're getting the spice. Interest rate funds, unchanged. Cryptocraft.com. I'm going to shout them out. They don't pay me or anything. What's up, Tails? Screen's too small. It's okay. The screen is way too small. You can jump over to... That's weird. You can jump over to the mainstream, guys. We have a mobile version. Right now, we have a mobile version of Vertical Stream. Are we watching ads for the FOMC? Is this like an ad?
Also offer in-person
Whoa, loud. Sorry, fam.
development that allows educators to deepen their knowledge and hone.
What the hell? All right. Now nothing? What in the hell?
Group, they get an in-depth look at how the Federal Reserve works to promote a healthy, sustainable U.S. economy. At the board and reserve banks, students also get hands-on opportunities like internships and participation on student boards, which introduce them to key economics concepts and potential careers in economics and finance.
An ad from the Fed.
Empowered to make sound
financial Fed ad. We're gonna tune back into the Fed here in just a minute after this like ad or whatever this is over. Market spicing. Let's take a look at some of this damage. I'm gonna take this off. Take a look at some of this damage here. The dollar dropping precipitously on the change, down 0.2% in a 1 minute candle. Wow. Not really a big deal in the greater picture here. Just looks like another lower high, potentially looking to paint another higher low. Dollar definitely reacting, though. That is some volatility. This is why we say, don't trade the Fed day. You get your ass handed to you. Look at this dollar bleeding. A lot of analysts were looking for dollar strength here. Maybe the rally into the FOMC was a sign that maybe they shouldn't have been looking for dollar strength. I don't know. Stocks taken off. Woo, that is a candle. S&P 500 up to 5,200. And is that a new all-time high? A new all-time high. Stocks blasting, baby. Blasting. Let's take a screenshot of that. Let's take a little screeny. That deserves a tweet. I love tweeting. I love tweeting during these. Wow. Pumping. No stocks pump on no interest rate. On no interest rate change. There we go. There we are. Nice little Tweedledee. Ooh, Tina.eth. I don't even know if you guys can see that. There's a tweet. You can follow me on Twitter, Tom Crown Crypto. Good stuff. Some real live time tweeting. This is what's interesting here. Clearly we see a correlation. We got a little news dot. Whatever, we don't need this. Here's a little interesting thing going on these charts. We got the S&P 500 pumping. We have the dollar dumping, and it is perfectly in correlation. Perfectly. Like at the exact same moment, the exact same candle. Even kind of looks about the same percent just sitting here. But someone did not give Bitcoin the memo. Bitcoin not doing anything. Kind of like a little special friend. Doesn't know what's going on at the party, but he's smiling and having a good time. Bitcoin, you can come to my party, buddy. You're welcome. You're a good dude. What is going on? And we've got a little candle, little pumpy, no new high, nothing like that. Dollar broke down hard, stocks pumped hard. Are we not moving in the normal FOMC fashion? This was our prediction earlier in the stream. And when I say prediction, I mean this is the FOMC chart. This is what we see. I would say about 90% of the FOMCs. Whatever direction Bitcoin's heading in, we get the interest rate hike. It reverses, trends the other way until Chairman Powell starts speaking 30 minutes later, when it reverses again and usually just returns to right where it was. Just bad chop trading, hunting, stop losses in both directions. S&P 500 signaling that maybe it's not over though, closing that 5-minute candle hella strong. Let's go. New all-time highs right in front of you. 5 minutes after. No interest rate hike. Honestly, maybe markets are saying good no interest rate hike, or no interest rate cut. I'm so used to saying hike now. Top's not in, baby. Top's not in. That's what I think markets are saying right now. No hike, top's not in. Dollar still dumping. Bitcoin still doing nothing. We've got 25 minutes till Chairman Powell speaks. I hope that we can put on as much upside as we can until then, because Lord knows he comes in and it all stops. The show stops. Like it's just over. It is over. Let me see down here. A little VIX dump as well. Okay. On brand, on par. I'm going to put an alert down in the 11 area for VIX. You don't really need an alert to the upside on VIX, I feel, because you know when it breaks highs. It breaks highs and charts are going nuts. I didn't look at the NASDAQ. I don't know what I was going to say about it. Not going to look at it. There it is. S&P 500 heading potentially to the top of the parallel channel. 5282, probably. I would hold your horses, though. Hold your horses until Chairman Powell comes out and tells us how much data they don't have and what they're going to do with the data when they have it. As he said every month for years. Something like that. This is one of the spicier outcomes, though. I don't think the last FOMC had quite this spicy price action. In fact, Bitcoin may be breaking its mold here. Ooh, it is rare. It is rare to see an uptrending Bitcoin break its local high, the high previous to the interest rate decision. This is uncommon. This might be one of the few times where we don't get this move. Spicy. Let's take a look at the hour. Not yet. Not yet. Weird. I don't trust it. Do you guys trust it? Yes or no? Yay or nay? Here's the previous daily support we talked about earlier in the episode, 65,250. He said, potentially, we test it. I was actually expecting pre-announcement. Before falling lower. A rejection from that level going to make this short-term outlook not look good, potentially suggesting the low not in locally at 60.7, 60.8. We will see. Time will tell. Dollar finally finding some bidders here as stocks and Bitcoin see a red candle. Spicy. All right, let me see what the chat's doing. We got 22 minutes until Chairman Powell is live. What should we do? El jalapeno. Almost 2,000 votes on the poll in the mainstream. Rock on. Yes. Yes. What's up, B4 Crypto? How you doing, brother? How you doing? What you guys could do to earn my utmost appreciation is take a moment. Navigate your mouse, navigate your finger on over to that like button. Hit the bell. Hit the subscribe. I guess not in that order. Whatever order you want. Do me a favor, do that. Then you can share the stream if you have social media. You want to share it out, I'd appreciate that as well. We only have 600 likes. It looks like we have 4,000 live viewers, which seems absurd. Seems absurd. Let's get 1,000 likes. We can do that. We can do that in 5 minutes if we just band together. Band together, fam. We can do it. This is all a team effort. Thanks for doing this. Major benefits. This is what we do, friend. This is what we do. This is how we do. I think I accidentally closed the poll. Good. We didn't need it anymore. We didn't need it. Drum roll. AVAX, says Dave. Not absurd. Talking about Tom Crown. You guys made me blush. Whew. Mr. Techno Goody. It's been navigated. Check adult. What is adult? Never heard of it. Probably with revised growth. There's no way they can lower rates. No, I don't. Here's my hunch. My hunch is this. I alluded to it earlier when, if you missed the beginning, we had some solid info at the beginning about the FOMC's and interest rates. But my hunch is this. I didn't say it. The economy is hot. Stocks literally, the S&P 500 literally stayed an all-time high. We are currently at an effective rate of 5.3%, which is in that range of what it's always been. We've had periods of zero right after kind of black swans or historic collapses, but we're right at the average range of where the Fed rates sit. I don't think the Fed really wants to turn rates down. The last two times they've moved rates down have been 2020 during the crash of everything, the world shut down, and in 2008 in the financial crisis. I think the Fed wants to keep those rates at 5.3%. They've said higher for longer. We kind of laughed about it, but higher for longer is probably it. This gives them something important. While rates are at 0%, if we have some kind of black swan, some kind of cataclysmic event, they don't have the ability then to lower rates unless they go negative, which I don't think they'll ever do in the US, but they don't have the tools to address it. So by keeping it up here at 5, when something inevitably bad happens, when we have some kind of market crash, whether that's this year or even this decade, who knows, but that gives them the ability then to cut them, to have some kind of power or influence over what's going on. I don't think they're going to cut them until something bad happens. I'm not wishing for anything bad. I only wish you guys the best, but like that kind of seems like what's going to happen. I don't know if we'll see them. I don't think we'll see them in the next quarter. I think if we get them this year, they'll be like Q4. I've been wrong before. Who knows if I'm wrong now? Time will tell. I just do my best. Tom Crow. Tom 100K Crow. What's up, arguments against? Who else is? You got a lot of new viewers. What's up, D Netherlandsy, Crypto Group, Doze, Greg Shavuk, Josh Reed, Roger Culin, Stephen Diop, Stuart McCluskey, Tyler Most. We got a lot of new names. Arjub Lamchini, Before Crypto. Got that one before. Bad Baptist joined us. Finally, man. About time. Bitcoin halving. I think we got that one. Speaking of the Bitcoin halving, doesn't take a lot to get me talking about it. Doesn't take a lot to get me on it. Dear miners. Dear miners, this is Tom Crown. Former Prince of Litecoin, I suppose. Wasn't invited. Nobody told me. Wasn't invited to the Litecoin Summit this year. Saved their booties in 22. MC'd it for them last minute with no help. But I digress. Asking you to slow your rigs down by just a little bit. Guys, If the halving happens on 4/20, April 20th, all of our dreams will come true. That girl you like who's never noticed you, she'll all of a sudden call you, ask you out on a date. You'll probably find a lottery ticket on the ground and it'll be a winner. I don't know, other good stuff. Other made up good stuff. April 20th, just a little bit, slow them down. Looks like it's about April 16th now. It's been fluctuating around. I expect it to get more volatile as we approach. And just a little bit. I'm not saying turn them off, just a little bit, all right? Just a little bit. Great time to remind you, discord.gg, join our fam. Even if you only tune in for the FOMC days, our Discord is popping 24/7, traders talking from all around the world. Thousands of years of trading experience cumulative in there. Jump in, discord.gg/Tom Crown, and in the video description below, set up with any of our partners, any of them. And you will get VIP exclusive access for free to our trade, I don't know, group
plus,
channel.
Let's go. Congrats, homie. Much deserved.
I did not expect that. I think I'd silence those. Kelly Kellum, my guy. Shout out to you, man. Congrats. Thank you. Like I said, we're getting everyone else to 100K next. Sign up with our partners. And in the Discord, use our bot. You'll get VIP access to our trading rooms, etc. It's exclusive, but it's free. It's free. Do it. All right. Bitcoin not really following what I would expect here. Now, we did see weakness in the dollar, so we would logically expect strength in everything else. Virtually everything else. Actually, that reminds me. Let's pull up gold. We're going to re-add the fourth chart for now. There it is. Of course it did. What's up, Michael Norris? Of course it pumped. Weakness in the dollar means strength for, honestly, every other thing that isn't the dollar. No new all-time high on gold yet, but does look to be breaking out of what was a low time frame, kind of crappy pattern. Lower highs, lower lows, downtrending. There we are. Potentially low time frame reversal on gold, probably retargeting the all-time high, 2200-ish. Checking it back in on the dollar, almost back to where it fell from. Maybe our FOMC trading diagram isn't bunk this time. Typically, we see whatever direction any asset's moving, reverse on the interest rate decision, regardless of what that decision is, even no decision today. Only then to reverse again after Chairman Powell speaks, and then slowly just returns to where it started, to the equilibrium. This is why I recommend not trading on the FOMC day. You are incredibly likely to just get stopped out left and right. Let's see where that candle opened. I don't really need the fib tool. The dollar opened at 103.911. Ooh, conspiracy. So far it's dropped as low as 103.6, which is a fraction of a percent, 0.25%. But for the dollar, an extremely volatile move. Dollar does not tend to move like that. S&P 500 opened at 5174. Instantly on the no interest rate decision, blasted. This better be an all-time high. Yeah, blasted to a new all-time high. 5,200 on this rate, or on this decision. It only took 5 minutes. Since then, we have chilled back down, kind of maybe targeting where it opened. We've got 14 minutes until Chairman Powell is live, so we got to get all our hype in, all of our charts in now. We got to get it all in now, because once he starts, not going to want to miss it. Not going to want to miss him. Not answer the same questions. Be badgered by politicians from both sides of the aisle, trying to get him to be. It's like when you're a kid and you're like trying to like get the teacher to like be like punish someone else. You're like, but those guys are doing this, and it's just every time. Yeah, he's like, I don't give an F. Like, that's not my job. I love that about him. Say whatever you want about it, but I do love that about him. You're in for a crazy one. Always are. Bitcoin 64.1. It did ever so slightly break the swing high before the decision. That's unusual. It's unusual unless in the next 14 minutes it trades back down, and that looks like it always does. Little wick on top of that, but really nothing. Nothing at the moment. Let's move that back. Let's make these big. And we're going to set up. We're going to set up for Chirpow. If you've got the emojis, if you have the membership on YouTube, I expect full emoji spamming. Full emoji. Chirpow spams. Ooh. Go. There we go. Boom. It's going to be starting up in just a few here. Just a few. I'll change the other one. What's up, Christopher Morales? Let me shout out really quick here. Christopher Morales subscribing. Jeff Myers, Balaz, Juaz. Michael Norris becoming a member 9 months in a row. Cheers to you, my friend. Kelly Kellum again, shout out to you. New Class Music subscribed. Seisman Rudak, Vederik TV, Wilhelm, Yoin, Randy, Tawisak, Kanjuanvich, Hellcrasher, G-Man, Psymaster, Benna Yeeds, Muhammad Musa, Zachary Garland, Jeffrey Achingpong, Muhammad, a lot of names, Tony Hart. Anyone I missed, I'm sorry, but keep subscribing. Join our fam. We did hit 100K. I'm not going to badger you about subscribers as much, but, you know, we got all these viewers. Let's get some more. We are now less than 10 minutes from Chirpow. What should we do? Should we yell out and tweet at Gina? Should I tweet at Gina? Gina, why don't you ever notice me? Gina, I talk about you every month. Chirpow salt higher for longer. Yeah, I agree. I was in the other boat earlier. I'm in the Chirpow boat now. Higher forever. Let's just higher forever. Let's get them emojis in there. Keep the markets moving. Let's move the interest rates back down like when Bitcoin's in its next bear market. That'd be good. Shout out to the people who build their own trading UIs. Very specific, Theo, but shout out as well. What's up, Mr. Crown? What's up, Crypto Machinist? Ooh, the Gina emojis. Oh, Gina. Someday Gina will be my wife. She is currently the wife of someone else right now, so that does make it difficult, but it is just a hurdle, not a roadblock. I wonder if Gina knows about her YouTube popularity. That's a good question. I have a feeling she has no idea. In the beginning, we did tweet at her a few times, obviously nice things, but like, I don't know. What would she realistically say to me? Like, what would she really reply? Nothing. There's like nothing to be said. What's up, Alex Payne, E-Troc, sneaking in them subscribbles here. Appreciated. Max Russell as well. Be like Max, Alex, and E-Troc. Be the best. Be the best you can be by joining our community. I'm really just killing time at this point. Just killing time until this starts. Killing time. It's not very long. If you've tuned in and you have no attention span, I'm there with you, fam. I feel you. But it won't be long now. Only a few minutes. It's longer when you have like the 1 minute candles up. All time takes longer. Apparently that is the secret to time travel. You just put on really small candles. Small candles. Make sure that's playing. Ooh, sorry. That's their music. They're rocking out a little bit. Better than their elevator music that we usually see. Let me see, I got alerts, S&P, of course. Got gold, of course. Checking my alerts here. Checking my alerts. What's up, Igor? Igor, my guy. Nice, this is some big viewership. 100K celebration, we just hit it. Long time no see, what's up? What's up, Mr. Lastinger, my friend, my guy? Hit you up sometime as well. I'll have to hit you up and go check out Blockchain Basement. They're here earlier. It ain't murdering, you're just killing time, that's right. Meet me out by the barbecue. Okay. No time, FOMC soon, I know. Pickle is the sound master. That is correct. He is the official sound master, production master of the show. So you need to compliment her and ask her questions in professionalism. Not really my jam, guys. Not really my jam. Politeness, but professionalism, nah. Can't talk about Steve charts. I do apologize. I pulled them up, but I'm ADD as hell right now. Can we get 1,000 likes? Maybe we should just do that. We've got 7 minutes. Let's get 1,000 likes in that time. If we do, I'll give away some memberships. Danius, YUC not on full screen. If you're on your phone, you're on the right stream. If you're not on your phone, navigate to the channel page and jump in the full screen stream. Full stream. Stream. Let's learn and earn. That's right. That's right, baby. Ring says we topped, says Steve. I hope Steve's wrong. I hope Steve's wrong. It's kind of interesting. S&P. I guess I haven't looked at this in a while. S&P hitting that 2 measured move, 5,170. What's actually kind of spooky about that too is very much where our local daily resistance is. Actually, 5172. Spooky. Our greater extension though gives us even more beastly numbers. 5,800. I'm still looking for 5,800. We'll see. What do you guys think? S&P bullish, bearish? Bearish. Correct. The dollar now heading back to where it started. Deja vu as our FOMC trading guide seemingly about to slay it again. Prepare for another third. 1, 2. Prepare for the next reversal. T-minus 5 minutes and counting. Marie O'Connor, thank you. 1272 on the weekly. That's right, Daniel. Let's dip. All right, we'll dip it. Xcal Lion, Gina. Notice me, Gina. I love you. Gina. What is her last name? I forget. No, don't put it in here, even though it is public. Simialic. I don't know how to pronounce that. Gina. Love me, Gina. The beautiful. The gorgeous. Someday we will be together, Gina. Someday. Not today, but someday. All right, I'm killing time, but time is almost done on the killing. G of all G's, the G-force. I like that. What's up, Muko? So many homies from the other communities in the chat. Feeling the love, guys. Like, obviously from our community, but from everybody. Yeah, we have worked 5 years. This channel will be live streaming 5 years, June 1st. So almost 5. 100K has been the goal, the all eyes on the prize for those 5 years. We finally made it. It feels too good to be true. Makes me a little nervous. Crypto and trading has really given me some PTSD when it comes to good feelings. Yeah, that should be a warning for everyone. Cost you 3 ads to get in here. Shoot. YouTube does as YouTube does on those. Don't know. Let me see if I can crank that back though. Sometimes it'll set to a different ad, like aggressiveness. Let's see if I can make it a little less aggressive. Maybe calm the beast a wee. Here we are. I did all I could. YouTube just does what it does. How's Beans? Not here next to me. Downstairs. Probably sleeping. The Kellys of Kellums. Kelly Kellum's a good guy. I don't know if that's... Oh, yeah, because your channel is not that one. I was like, whoa, that's not the right one. Kelly Kellum, you need to go to your YouTube page and you need to add BitLab Academy. Like, to it. To your personal page. That way, I can navigate it. Kelly Kellum, this is yours, right? Block, I don't know, this is yours. Give them a subscribe too. Good guy. Chappelle whipsaw effect every FOMC, dude. It's everyone. Full of market confusion. Today is not a day to open on an impulse move. Special shout out to Gina. Your words are very appreciated, Kelly. Very. We are now less than 2 minutes from Chairpow speaking live. Now is the time to go take your bathroom break. Grab a brew if you finished your brew. Roll another one up if you do. Start typing in caps because it's the FOMC day, and that's what I do for some reason. Typing in all caps. Let's set up this the littler stream. The vertical stream. I set this up so I can actually see it. Go. There it is. Done. That'll do. That'll do. That'll do, pig. That'll do. We've got like a minute. Hurry up. Hurry up. If you got to go mid-stream, giggity. If you got to go during, ooh, there it is. Less than 60 seconds. Get ready. Good time to hit those likes and subscribes. But if you got to go midstream, feel free to keep a tab open. Help the stream in the algo by keeping that stream up, baby. No 420, just vape. That's okay. DJ Johnny. It's okay. It's optional. Your SPY puts are down 75%, Brian. I can see that. But interesting choice for puts at all-time highs for stocks. Not a criticism. Not coming after you. Just saying. How many times will the phrase soft landing be said? Well, let's go over the drinking game rules really quick. Let's go over the rules really quick. We can add that one. Soft landing, drink. Data, drink. We don't have the data, shot. Gina on camera, chug. Let's see, what other good ones? Give me some rules. We've got like 45 seconds. 45 seconds. All in Bitcoin now, says Marino, Transylvania. I mean, I like that. I like that idea. I don't know if that's a great idea to do if you're looking for short term, but I mean, I'm all in on Bitcoin. I've been all in on Bitcoin, baby. Let's go. 10-minute candles do give this a different vibe. Good eye, Greg. 2% targets remain blah, blah, blah. Ooh, every time a politician... Oh, there won't be politicians here because this is not in front of Congress this time. I was going to say, every time a politician tries to point the finger at the other side of the aisle, that's a good one. Ooh, the word sticky. That's a drink. You better believe that's a drink. Still hurting from St. Patty's Day. Fair enough. You could just be drinking water. We are hydro homies here as well. But now everybody shut up. Everybody shut up. It's Chirpow time, baby. Chirpow o'clock. He's always fashionably late, that diva. That diva. Go. Maybe. I mean, who knows? Who knows? He might be too cool to show up. Like, sorry, bros. Sorry, bros. I was too busy shorting all your stocks. Suckers. Here it is. Audio check. Audio. Like I told you, always fashionably late. Oh, there he is, strolling in. Look at his little swagger. I control the world's fate. That's the swagger of a man that controls the world's fate.
Good afternoon.
Good afternoon.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic
Thank you for coming.
Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply.
That was double drink.
The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressure on inflation. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
And with mortgage rates over 5%.
Returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate.
Higher for longer. Gina, drink.
We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments.
It's the dot plot.
Path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026. Still above the median longer-term funds rate.
Not too much. Not
These
too tight, not
projections
too loose.
are not a committee decision or
Goldilocks.
plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. Turning to our balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon, consistent with the plans we previously issued. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and price stability over the long term. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Never calling me. Never calling me. I try every time. Never
Steve
calling me.
Leisman, CNBC. Mr. Chairman,
Mr. Chairman
the
Powell.
projections show somewhat higher core inflation. They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow the economy to achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming as I pointed out in my opening remarks. We did mark up our growth forecast, and so have many other forecasters. So the economy is performing well. And the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their inflation. But nonetheless, we continue to make good progress on bringing inflation down. And so...
When you just to follow up, when you say that you're willing to either maintain the rate for longer, is what
Watch your speakers. I'm going to try to turn it up.
inflation coming in above its 2% target?
So we're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that outcome, and we will bring it about.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You and others have been saying that relief on housing inflation is coming, but it still hasn't shown up meaningfully in the CPI or the PCE. Does that challenge your assumption about when the shift will finally break through, since it hasn't at that point?
So I think there's some confidence that the market rents, lower market rent increases that we're seeing will show up in measures of housing services inflation over time. There's a little bit of uncertainty about when that will happen, but there's real confidence that they will show up eventually over time. But again, uncertainty about the exact timing of that.
Okay. And will you be able to get overall inflation down to target if housing doesn't break through quickly, and does that affect the timing for eventual cuts this year?
We will get aggregate inflation down to 2% over time. We will. And I would assume that what we'll continue to see is we'll see goods prices coming into a new equilibrium where they're down, perhaps not as quickly as they had been earlier this year, where housing services inflation will come back down as current market rents are suggesting will happen, and where non-housing services will move back down. Some combination of those three things, and it may be different from the combination we had before the pandemic, will be achieved and will bring inflation back down to 2% sustainably.
Nick Timmeros of the Wall Street Journal. Chair Powell, during your congressional testimony this month, you said that your test for making the first change to interest rates does not require you to be terribly comfortable that inflation is at 2% because interest rates are well above neutral. At the same time, you said here after the last meeting that the first cut is highly consequential. Can you reconcile these views for me? If rates are well above neutral, why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019, which itself was modeled on the mid-cycle adjustment of 1995?
It's more, I would put it more in the context of what I said in my opening remarks, that the risks are really two-sided here. We're in a situation where, you know, if we ease too much or too soon, we could see inflation come back, and if we ease too late, we could do unnecessary harm to employment and people's working lives. And so, you know, we do see the risks as two-sided. So it is consequential. We want to be careful. And fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation that we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
So I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. But I would say the January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point. But we didn't. Last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more, that we could, we wanted to be careful about that decision, and we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
Hi, yes, Chair Powell. Could you speak a little bit more about the timing? Is there enough data between now and, say, May to be able to get the kind of confidence that you say that you still need, or by June, is there enough data for you?
Definitely not.
Just give us a sense of your thinking there. Thank you.
No, I will not.
Yeah, so we make decisions meeting by meeting, and we didn't make any decisions about future meetings today. Those are going to depend on our ongoing assessment of the incoming data, the evolving outlook, and the balance of risk. So I really don't have anything for you on any specific meeting looking forward.
Sorry, couldn't tell you.
Just a question of, is there even enough data for you to?
No. Nope.
We'll take.
Isn't currently, won't ever be in the future.
Things can happen during an intermeeting period if you look back, unexpected things. So I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us higher confidence that inflation is moving down sustainably toward 2%. I also mentioned, and we don't see this in the data right now, but if there were a significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process of reducing rates. Again, there's nothing in the data pointing at that, but those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
Chris.
Hi, Chris Rieger, Associated Press. Thank you. In the projections, there is an increase in the neutral rate, as you know, and higher rates, a quarter point higher rates projected in 2025, 2026. Can you speak about what might be behind that? Is there a real sense here that the economy has perhaps changed in some way, that higher rates will be needed in the future? Thank you.
So you're right, they're pretty modest changes, but you're right, there was an uptick in the longer run rate, and also there's a 25 basis point increase in 25 and 26. In terms of are rates going to be higher in the longer run, if that's really your question, I don't think we know that. I think we think that rates were generally low during the pre-pandemic, post-global financial crisis era for reasons that are mostly, important, slow-moving, large things like demographics and productivity and that sort of thing, things that don't move quickly. But I don't think we know. I mean, my instinct would be that rates will not go back down to the very low levels that we saw, where all around the world there were long-run rates that were at or below zero in some cases. I don't see rates going back down to that level, but I think there's tremendous uncertainty around that.
Great. And just a quick follow on the projections, you also have 2.6% core inflation for the end of this year. It's already at, or you mentioned it being 2.8 in February. I mean, that doesn't sound like much disinflation at all. So are you still confident? Or the last press conference, you sounded pretty optimistic you would get more confidence to the end of this year. Is it right to say that this suggests you're not seeing a lot of disinflation this year compared to what we've seen 2023 and so forth?
I think that higher year-end number reflects the data we've seen so far this year, because you're now in this year. So I think that. Sorry, say your last part of your question again.
Well, just, where am I? Are you still optimistic that you'll get the confidence you need this year?
I think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the incoming data. It is. The other thing is, in the second half of the year, you have some pretty low readings, so it might be harder to make progress as you move that 12-month window forward. Nonetheless, we're looking for data that confirm the kind of low readings that we had last year and give us a higher degree of confidence that what we saw was really inflation moving sustainably down to 2%, toward 2%.
Where does that data hide? Where is it? And if you don't know where it is, who knows where it is?
Gina Smilik, The New York Times. Thank you for taking our questions. Per your comment to Ann that a weakening in the labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut, would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024 the way it did in 2023, what would stronger hiring and possibly stronger growth mean for the path forward on policy?
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is actually feeding demand because workers are getting paid and they're spending, and that's, what you would have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can have that if you have the continued supply side activity that we had last year with both with supply chains and also with growth in the size of the labor force.
But so strong hiring in and of itself would not be a reason to hold off on rate cuts?
No, not all by itself, no. I mean, we saw, you saw last year very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Gina, again, please.
Hi, Chair Powell. Neil Irwin with Axios. How do you assess the state of financial conditions right now, and in particular, do you view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
So we think there are many different financial conditions indicators, and you can kind of, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate. Things like that are really demand. There are also supply side things happening, but I think those are demand side things happening. We saw, that's been a question for a while. We did see progress on inflation last year, significant progress, despite financial conditions sometimes being tighter, sometimes looser.
Michael McGee with Bloomberg Radio and Television. Can you give us more color on how the committee is thinking about inflation dynamics now? What we've seen at the beginning of the year, are they more one-off increases that will fade, or is there more of a secular turn with goods prices rising again and service prices staying sticky? And also, housing prices have been sort of the Godot of this cycle, in that you keep expecting them to go down and they don't. How does the committee see this playing out forward since you've raised your inflation forecast?
So I see the committees looking at the 2 months of data and asking the same question you're asking and saying we're just going to have to see what the data show. As I mentioned, you can look at January, which is very high reading, and I think many people did see the possibility of seasonal adjustment problems there. But again, you got to be careful about dismissing the parts of the data that you don't like. So then February wasn't as high, but it was higher. So the question is, what are we going to see? We tend to see a little bit stronger, this is in the data, a little bit stronger inflation in the first half of the year, a little bit less strong later in the year. We're going to let the data show. I don't think we really know whether this is a bump on the road or something more. We'll have to find out. In the meantime, the economy is strong, the labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully and feel more confident that inflation is moving down sustainably at 2% when we take that step to begin dialing back our restrictive policy.
Well, you've talked about the desire to have confidence that inflation is continually moving down. Has the recent numbers we've gotten for inflation data dented that confidence at all?
It certainly hasn't improved our confidence. It hasn't raised anyone's confidence, but I would say that the story is really essentially the same, and that is of inflation coming down gradually toward 2% on a sometimes bumpy path, as I mentioned. I think that's what you still see. We've got 9 months of 2.5% inflation now, and we've had 2 months of kind of bumpy inflation. We were saying that it's going to be a bumpy ride. We consistently said that. Now here are some bumps, and the question is, are they more than bumps? And we can't know that. That's why we are approaching this question carefully. It is very important for everyone that we serve that we do get inflation sustainably down. And I think the historical record, every situation is different, but the historical record is that you need to approach that question carefully and try to get it right the first time and not have to come back and raise rates again, perhaps, if you cut inappropriately, prematurely.
Go to Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, you received a letter from, the Federal Reserve, for independent body, understanding Congress has oversight over that. You received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said, calling on you to lower interest rates, to cut interest rates, because it says, quote, the potential that it may remain too high for too long has halted advances in deploying renewable energy technologies and delayed significant climate and economic benefits from these projects. So has higher interest rates caused that?
Have they? Well, first of all, I respect in our system of government, it is Congress that has oversight responsibility over the Fed. We place a tremendous amount of importance on our engagements with Congress and always treat them with great respect. In this case, I would say those are, our mandate is for maximum employment and price stability and the other things that we do. And that's what we're trying to accomplish. We're trying to do that in a way that sustains the strong growth we're seeing, the strong labor market we're seeing, but allows us to make further progress with inflation. That's how we can best serve the public and leave the other issues, which in many cases are incredibly important, such as those you mentioned, leave those to the people who have responsibility for those.
There was another letter from 2,000 lawmakers saying that the higher rates are squeezing the working people. How do these letters affect what you guys are doing policy-wise?
We receive these letters with respect, and we write careful responses and address concerns. We listen, again, because we're talking to the people who in our system of government have oversight over our activity. So but at the end of the day, we take that on board, but we have to make our judgments and we have to stick to our knitting, which is maximum employment, price stability, supervise and regulate the banks, work on the payment system, the things that we do.
Claire. Thank you. Claire Jones, Financial Times. Thanks a lot for the opportunity to ask a question. As chair of the FOMC, would you want to see unanimity on the committee or something close to it, meaning no more than one dissent before you begin cutting rates? Thank you.
We're a very consensus-oriented organization, and we do try to achieve consensus and ideally unanimity. People do dissent. It's something that happens. Life goes on, and it's not a problem. We've always had dissents, and so you respect thoughtful dissents very much. It's like you may not agree with some arguments, but you really want to understand them. So you may read a book that takes a position that you have long opposed, just to understand that book. So I treat dissents with real respect as well.
So Simon, one would be okay.
Simon Rabinovich with The Economist. Can you hear me?
Yes.
Okay, great. Obviously, inflation is some ways away from target. Unemployment, though, if you look at the projection for the full year, 4.0%. In February, we were already at 3.9%, so quite close to the median projection. Are you concerned at all that, notwithstanding the very strong jobs growth, that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
Is that Mark Zuckerberg?
So we of course monitor it's one of our two goal variables. We all monitor the labor market very, very carefully, and I don't see those cracks today. And we follow all the possible stories that are out there about there being cracks. But the overall picture really is strong labor market. The extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved. You're seeing high job growth. You're seeing big increases in supply. You're seeing strong wage growth, but wage growth is gradually moderating down to more sustainable levels. In many, many respects, things are returning more to their state in 2019, which we can think of as normal for this purpose. That's job openings and quits, and surveys of workers and businesses are always interesting on this. How easy is it to find a job? How easy it is to find a worker? Those surveys have both come down. So the labor market's in good shape. You do see things like the low hiring rate, and people have made the argument that if layoffs were to increase, that would mean that the net would be fairly quick increases in unemployment. So that's something we're watching, but we're not seeing it. Of course, initial claims are very, very low, and if anything, have tracked down a little bit. So watching it carefully, don't see it. And when I say something, I use the term unexpected weakening in the labor market. So, we do expect the unemployment rate to, the forecast is that it would move up, I think, closer to what we see as the longer run sustainable level. That's just people's forecast, individual forecasts. But we're talking about something that's unexpected. That's where I'll leave it, though.
Steve.
Steve Matthews with Bloomberg. You mentioned at the beginning of the press conference that that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering, is when you say fairly soon, does that mean that the committee would meet about this again in May and a decision could be reached that soon? And I was wondering if you could also just describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature? Thank you.
Go to my birthday party, Chair Powell.
So that is what we're discussing essentially is and we're not discussing all the many other balance sheet issues. We will discuss those in due course. But what we're really looking at is slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in Treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the idea, that's what we're looking at. And in terms of the timing, I said fairly soon. I wouldn't want to try to be more specific than that, but you get the idea. The idea is, and this is in our longer run plans, that we may actually be able to get to a lower level because we would avoid the kind of frictions that can happen. Liquidity is not evenly distributed in the system, and there can be times when, in the aggregate, reserves are ample or even abundant, but not in every part. And those parts where they're not ample, there can be stress. And that can cause you to prematurely stop the process to avoid the stress. And then it would be very hard to restart, we think. So as something like that happened in 19, perhaps. So that's what we're doing. We're looking at what would be a good time and what would be a good structure. And, fairly soon is words that we use to mean fairly soon.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
So that our longer run goal is to return to a balance sheet that is mostly treasuries. I do expect that once we're through this, we'll come back to the other issues about the composition and the maturity and revisit those issues. But it's not urgent right now. We want to get this decision made first, and then we can, when the time is right, come back to the other issues.
Victoria. Hi, Victoria Guida with Politico. Also on the balance sheet, can you talk a little bit about how the outlook for the banking sector might impact your balance sheet plans? Do you worry that as deposits start to shrink that we could see more turbulence?
We'll be watching carefully, but one of the reasons we're slowing down, we will soon enough, fairly soon, I should say, slow down, is that we want to avoid any kind of turbulence. I wasn't thinking particularly about banking sector turbulence, but we had some indicators the last time. This is our second time in doing this, and I think we're going to be paying a lot of attention to the things that started to happen and that foreshadowed what eventually happened at the end of that tightening cycle, where we wound up in a short reserves situation, and we don't want to do that again. And I think now we have a better sense of what are the indicators. It wasn't so much in the banking system as it was around, for example, where federal funds is trading relative to the administered rates, and where secured rates are relative to the administered rates. Those sorts of things. We will always be watching the banking system for similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the overnight reverse repo facility, drops near at zero?
I think we broadly think that once the overnight repo stabilizes either at zero or close to zero, that as the balance sheet shrinks, we should expect that reserves will decline pretty close to dollar for dollar with that. That's what we think.
Let's go to Jean. Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask also about the balance sheet. You said that starting the taper sooner could get you to a smaller balance sheet size. Does that mean you don't have to make a decision on when to end QT at this point? And will you be setting up the process for deciding that sooner, or will you wait until we're close to the end?
So it's sort of ironic that by going slower you can get farther, but that's the idea. The idea is that with a smoother transition, you'll run much less risk of kind of liquidity problems, which can grow into shocks and which can cause you to stop the process prematurely. So that's where, in terms of how it ends, we're going to be monitoring carefully money market conditions and asking ourselves what they're telling us about reserves. Right now we would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant, right? So there isn't there's not a dollar amount or a percent of GDP or anything like that where we think we have a really pretty clear understanding of that. We're going to be looking at what these what's happening in money markets, in particular a bunch of different indicators, including the ones I mentioned, to tell us when we're getting close. Then, though, you reach a point ultimately where you stop allowing the balance sheet to run off, but then from that point there's another period in which non-reserve liabilities grow organically, like currency, and that also shrinks the reserves at a very slow pace. So you have a slower pace of runoff, which we'll have fairly soon. Then you have another time where you effectively hold the balance sheet constant and allow non-reserve liabilities to expand, and then that ultimately brings you ideally in for, brings it into a nice easy landing at a level that is above what we think the lowest possible ample number would be. We're not trying for that. We want to have a cushion, a buffer, because we know that demand for reserves can be very volatile. And we don't want to, again, find ourselves in a situation where there aren't reserves. We have to turn around and buy assets and put reserves back in the banking system the way we did in 2019-20.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, you said you're waiting to become more confident that inflation is getting to your 2% goal before you cut rates. Can you just sum up more specifically what data you're looking at that would give you that confidence?
Sure. So most importantly, we're looking at the incoming inflation data and the contents of it and what they're telling us. So that'll be, and also the various components. So obviously that's what we want. We want more confidence that inflation is coming down sustainably toward 2%. And I mean, of course, we'll also be looking at all the other things that are happening in the economy. We'll look at the totality of the data, including everything essentially, as we make that assessment. But the most important thing will be the inflation data that's coming in.
Well, are there things that you would give more weight to, like wages?
Wages is one thing. We don't. Our target is not wages. It's really inflation. We would look to the fact that wages are still coming in very strong, but they've been wage increases. That is to say, wage increases have been quite strong, but they're gradually coming down to levels that are more sustainable over time, and that's what we want. We don't think that the inflation was not originally caused, I don't think, mostly by wages. That wasn't really the story. But we do think that to get inflation back down to 2% sustainably, we'd like to see, continuing gradual movement of wage increases at still high levels, but back down to levels that are more sustainable over time.
Go to Greg.
Thank you. Greg Robb from MarketWatch. Chair Powell, could you say at this meeting whether there were more officials who wanted to be careful and go slower about rates than were at the last meeting? Was there that sense of maybe it's smart to wait? Thanks.
I guess I'd put it this way. If you look at the incoming inflation data that we've had for January and February, I think very broadly that suggests that we were right to wait until we're more confident. So I think I didn't hear anyone dismissing it as not information that we should look at or anything like that. So I think generally speaking, it does go in the direction of saying, yes, it's appropriate for us to be careful as we approach this question.
Brendan. Thanks, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask you about central bank digital currency stuff. We've been hearing a lot from Republicans in Congress about what the Fed is or isn't doing in a digital dollar. But I know you have said to Congress that you are going to wait for approval before the Fed does anything, launches anything. But folks like House Majority Whip Tom Emmer have said that the Fed is either actively researching or hiring personnel to study the implications of a CBDC. Can you give us any clarity on what the Fed is doing right now on a digital dollar?
Sure. So I think we've been pretty transparent on this, but I'll try harder. So we are not getting ready to, we haven't proposed, we haven't come to a conclusion that we should propose or anything like that, that Congress consider legislation to authorize a digital dollar. And it would take legislation by Congress signed by the president to give us the ability to do what we think of as a CBDC, which is really a retail CBDC with the public of it. So we're just a long, long way from that. What we are doing, and I think what every major central bank is doing, is we're trying to stay in the frontiers of what's going on in digital finance. And it has many, many different areas. You know, it has applications in wholesale finance, in the payment system. And so to serve the public, these issues have become very front burner in the last 5 or 6 years. We need to be knowledgeable about all that. So we actually do have people trying to understand things that are, but it's wrong to say that we're working on a CBDC and then we've secretly got a lab here where we've got one and we're just going to spring it on Congress at the right moment. We don't. I haven't at all in my own mind made a decision that I think this is something the U.S. should be doing. I just think it's something we need to understand, and we do have people who are keeping up with that as part of the broader payments landscape. That's how I would characterize it.
Mark.
Thank you. It's Mark Hamrick with Bankrate. Mr. Chairman, April 27th will mark the 13th anniversary since a Fed chairman began holding regular news conferences. How important has that higher transparency been in your view, both for the proper functioning of the central bank and also in accomplishing your mission? And is there more that you and your colleagues can do on the transparency front, and what might that look like?
I generally think, this movement actually started, 30 years ago, when some academics posited that a more transparent central bank, if the public understands your reaction function, the markets will do your work for you. They'll react to the data. And so it all happens that way. And so there's been a march toward greater and greater transparency. And that certainly Chairman Bernanke advanced that, so Chairman Greenspan did, Chair Yellen did. And so we went from four press conferences a year to 8, so now every meeting really is live now. I think that's a good innovation. I wouldn't want to turn it back. We also have done a bunch of other things. We have an annual supervision report, financial stability report. There's a long list of things that we've done. I think nothing comes to mind as really desperately in need of doing at this moment. We're very transparent. We have no shortage of FOMC participants speaking to the public through the media, and so that channel is full, I would say. So I think it's generally broadly helped and made things better, but not every day and in every way.
Well, to follow up, has there ever been a day where you wanted to put that genie back in the bottle somewhat?
Of course not.
The jokes at these are
Let's
getting
go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance.
Finance.
Not to harp too much more on confidence and inflation, but she did say earlier in this press conference that the recent inflation data hasn't raised anyone's confidence. But when you testified before the Senate a couple weeks ago, you told lawmakers that you are, quote, not far from receiving the confidence needed on inflation to begin cutting rates. So are you still of that belief or not? What are we to take by those words? Not far.
So let me say my main message at that in those 2 days of hearings was really that the committee needs to see more evidence to build our confidence that inflation is moving down sustainably toward our 2% goal. And we don't expect that it will be appropriate to begin to reduce rates until we're more confident that is the case. That is the case. I said that any number of times, so those were kind of the main part of the message. We repeated that today in our statement. I also, to the language you mentioned, I really pointed out that we had made significant progress over the past year, and what we're looking for now is confirmation that that progress will continue. We had a series of inflation readings over the second half of last year that were really much lower. We didn't overreact, as I mentioned, but that's what I had in mind.
But given that you said that PCE for February, 2.8%, the estimate, and that we have been seeing PCE, core PCE, coming down by 10% every month, I mean, wouldn't you be at about 2.4% this summer, June, July, to a point where you could cut then?
Well, we'll just have to see how the data come in. We would, of course, love to get great inflation data. We got really good inflation data on the second part of last year. Again, we didn't overreact to it. We said we needed to see more, and we said it would be bumpy. And now we have January and February, which I've talked about a couple of times. So, we're looking for more good data, and we would certainly welcome it.
We're welcoming the good data.
Thank you.
I'm looking forward. You're welcome. Well, there you have it, summarizing the entire Chair Powell stream. They're looking for the data. They're going to continue looking for the data. They don't have the data, but they're looking for, you know how it is. You know how it go. Hell of a stream, guys. I have no idea how we have so many of you here. I love it. This has been a memorable one. Oddly, Bitcoin seeming like the winner here. I don't know how that happened. Oddly, it's winning. Dollar saw a very steep drop. Stocks moving, of course, in the other direction, rallying on that weakness. Hitting new all-time highs. Bitcoin not at new all-time highs, but it's still pretty spicy. Only takeaway for the chart for Bitcoin today, we are right back to where we talked about. Go back to the beginning of this episode. Watch it. It has good stuff. Right back to where we talked about testing in the day-to-day. Rejection from here, looking for 61.8, breaking that potentially lower. If we blast through, 68.3 looking pretty good, and that's likely to begin the uptrend back to all-time highs. Spicy day. Appreciate all the new fam joining us. We had a few hundred new subscribers. Do me a favor. Hit that button before we end this stream. Subscribe and enable your notifications and jump into
Thanks for all the memorable
Discord.
Chair Powell streams.
There we go, Tesla. Didn't plan on letting that play, but that's like the perfect thing to play. Appreciate you, Tesla. Appreciate everyone who came today. I'll see you in the Discord, discord.gg/TomCrown. Jump in there, fam.